Welcome to Tax Bites for Expats, the top tax tips you want to know as an expat. The podcast is here to help answer the common queries and concerns expats have when moving to or from Ireland. Complex taxes explained simply. We'll focus on the Irish and international tax issues to be aware of to ensure you save time, money, and stress.
Avoid the hassle of dealing with your bank and transfer online, by app or over the phone with Currencies Direct today. Keep listening for an exclusive offer for Tax Bites for Expats listeners, and thanks to Currencies Direct for their support of this podcast. Hi everyone, welcome to this episode of Tax Bites for Expats. Today we're talking to Peter Ferrigno of Global Expatriate Tax Services, or GETS for short. He works with clients, their existing tax advisors and country specialists to make sure that all parties involved are fully aware of their tax filing obligations and the potential tax costs when moving to or from the UK. He's a UK qualified chartered accountant and a chartered tax advisor, and he's been working in the industry for about 25 years. He served as managing partner of EY's global mobility business across EMEIA, and thereafter he worked as COO of the immigration practice at Santa Fe Relocation, tax counsel at US law firm Reed Smith LLP, and tax partner at Blick Rothenberg in London. Peter, thank you so much for joining us. You've got a really impressive track record. It's really, really fantastic to have you with us today.
That's a very polite way of saying I'm old. Thank you very much.
Wise and experienced. What drew you into this area of tax? So you've worked in, international tax, mobility, residence planning. What was the draw card?
Once upon a time, long, long ago, far, far away, when I was a new graduate, I joined Arthur Anderson's in London and went into the tax department because they gave me the option of not having to be an auditor, which I thought at the time sounded more interesting. And at that point, you did everything in tax: corporate tax, VAT tax, as some people called it, not knowing what the T stood for. And back in about 93, when I was newly qualified, a lot of practices were opening up in Central Europe. So I ended up going to Poland, where we had a mixed tax practice of about 12 people. And over time, we had a lot of expatriates coming into and out of there because of the investment that the foreign companies were making there. And gradually, the local stuff needs to get done in local language, and I got left with the expat stuff. And I found I quite enjoyed it because you're actually dealing with people rather than corporates. Some people thought that the company tax stuff, because it's got more zeros on the end, is more glamorous. But I just liked the aspect of dealing with people, the fact that every situation is different, the questions are similar, but the answers can be not the same. So I just stayed into doing that. And then I migrated from Anderson's in Poland to EY in the Czech Republic, still doing the same thing. And every time EY reorganized and put the few countries together in different clusters, they seemed to want to give me that job. And I ended up running 88 countries across Europe for the global mobility business. And it was great fun, traveling everywhere, talking to clients in lots of different places. Also being in a smaller country and being the only partner, I ended up dealing with 24 of the 25 largest expat clients of the firm. So we were dealing with the banks and the car manufacturers and the consumer goods companies, and you just get to see an awful lot of different things. And then we started adding immigration to tax because that was a logical add-on, and that was how I ended up taking a detour into immigration for a few years. But that gave me just a broader view. And then after enough years with the big firms, you sort of get fed up with filling in spreadsheets for other people. And so now I've just got the role with GETS, but also we do some work with Henley and Partners on the investment migration side, which gives me the use of both skill sets. So yeah, life is fun.
Wow, varied career. What would you say in terms of, the experience that you've had? Big Four, you've mentioned there, we obviously reference law firms in your background. You've worked in immigration, relocation, and now obviously in GETS. How has this kind of vast experience shaped how you would advise somebody who's moving internationally? You've seen a lot in your time, I'd imagine.
So I've also lived internationally most of my career as well. I spent 8 years in Poland, spent 10 years in the Czech Republic, and now I spent the last 5 years remote working from Spain. So, so 3/4 of my career has been, having to eat my own cooking on that side, which is also interesting. I think the interesting bit that is that it's often not just around tax. So we've got a lot of people leaving the UK at the moment because they were non-doms with the tax changes, or the having to be within the net of inheritance tax when they weren't before. Often you're talking to someone, they're saying, well, I'm going to go, and it's really understanding their personal motivation, what their fears and concerns are. I've got one client, we spend a lot of time talking about where she wants to go and why and what kind of life she's going to have, because she knows she wants to leave the UK because she can't afford to stay there because of the tax changes. But at the same time, she's sort of having to move means confronting what she wants to do with her life. And that's quite a scary thing to have to do sometimes. Think, well, what am I going to do? Where am I going to be? What kind of lifestyle do I want? So I ended up, I've got a friend who does sort of career coaching counselling. So we ended up bringing her in as well to get involved. So when you've been doing this for a long time, you meet so many different people as well. And then you can identify those kind of issues, and there's always someone that can help. So
just to your point there about the changes in the UK. So we've seen that in the media, but you're speaking to real examples there. So there is obviously a migration away from the UK at the moment. Talk us through just high level what's driving people. You mentioned that client, she's concerned about the tax outcome.
Well, I think, as someone who's lived out, as a UK national who's lived outside the country for a long time, it's you sort of, when it's your own country, it's just sad to watch what happens. And I think it's very unfortunate. This government's been in power barely just over a year, and they're getting the blame for absolutely everything that's gone wrong ever since the financial crisis and Brexit and the lack of investment in public services. And there is a whole general feeling that it's, all the wheels are coming off. And you see Ireland next door, the Celtic Tiger, going from strength to strength and having a stronger economy than the UK does now. And you see other countries in Europe having avoided some of those problems. I think people just feel there's a feeling that nothing quite works anymore. And the government, unfortunately, had a great opportunity to sort of set out a vision for how they wanted to improve things, but they've managed to get themselves caught in granular arguments about this tax rise and that tax rise, and that the wealthy are going to get squeezed. It's quite ironic that it was the previous government that announced the abolition of the non-domicile status, and yet threw this government under a bus, and they've absolutely fallen for it. They didn't have to gold plate some of the provisions there. And I think the perception is that the people with the deepest pockets can absolutely pay for everything, but when the deepest pockets also have the longest, they only got deep pockets because they got long legs, and then they can go somewhere else instead. And I think the perception that the rich are going to have to pay more is fine, but everybody's definition of rich is slightly richer than they are at the moment. And you've got people on 100,000 a year that's in the marginal 60% tax rate because of the way the personal allowance gets phased out. And then they're being told that they're rich and have to pay more. And they go, well, how much more can I physically pay when the cost of living in the UK is so high? So I think the non-doms started the exodus because they were thinking, well, if I'm going to have to start paying on my worldwide income, there are other places in the world that will quite happily take my money, and we'll try and do this. So they've been looking at other places. And then once that narrative started, then UK nationals start looking, go, you know what? There are alternatives, and there are places with better weather and better food, which don't feel like they want to penalise me. And I think it's a shame that it gets personalised, because I don't think Miss Reeves or Mr. Starmer have an easy job. I wouldn't want their jobs. But the money's got to come from somewhere, but it should be coming from growth rather than taxing people that sort of have the choice of leaving. And this idea that they should have a wealth tax is like, well, only a few thousand people would have to pay it. Well, that means it only takes 3 jumbo jets and they've all gone.
Yeah, exactly.
Then what do you do?
And now a quick word on our episode sponsor, Currencies Direct. If you're looking for a fast, easy way to transfer money to or from Ireland without the hassle and cost of dealing with your bank, keep it simple with Currencies Direct. Whether you're buying property or require regular currency transfers, Currencies Direct can help you save money. As a special offer for our listeners, when you use the link in the show notes and quote expat taxes when registering with Currencies Direct, you'll receive a €50 one for all or Amazon voucher when you transfer €5,000 or more in your first 6 months with Currencies Direct. Registration is quick and easy, and you decide how you transfer 24/7 via their online money transfer service, over the phone with one of their friendly experts, or by using their handy mobile app. Check the show notes or head to currenciesdirect.com to register. And thanks to Currencies Direct for the support of this podcast. And that's the thing, is that, definitely post-COVID, we get a lot of inquiries from clients who are sometimes just considering alternative locations for lifestyle or retirement, but they're always interested to know, what are the tax issues if I make the move, or where might be favourable from a lifestyle, kind of cost of living and tax perspective. From your perspective, having advised families, for many, many years, high net worth individuals and relocating families, arguably, kind of C-suite level and above, what are the lessons that you've learned when you advise people? So when these clients come to you, what do you instill when you're helping guide them through making a decision to go or stay?
Well, this is the question we get a lot of from the Henley and Partners client base, because you've got high net worth people that are looking where to go anywhere in the world. And I think the questions are always the same, but the answers are different, because where you move to depends very much what your assets are, what your income is, because country of source may potentially still tax that income. I've had people with an extensive property portfolio wanting to leave the country for tax purposes. I go, you can welcome to do that, but the country where the real estate is will still tax the real estate. So you won't actually save any money by leaving the country unless you want to sell your real estate. And they're a bit surprised when I tell them that, because that's not what they read in the newspapers at all. I think also when we're looking at people leaving the UK, then, have they still got kids in university or school? Do they need to get back easily? Or, a lot of wealthier people in the UK are from Asia or the Indian subcontinent, at which point geographically Dubai may be handy because there's no tax and it's only a 3 or 4 hour flight to nip back should you want to. Whereas if you are still in private equity in London, you wouldn't want to move to Dubai, because every time you've got a meeting, it's 2 days out of your life. But Milan may be absolutely perfect because you can be there and back within the day. So everybody's needs are different. Everybody's requirements are different. I mean, Spain's lovely, but there's a wealth tax. So that rules it out for people once they get above a certain level. For people who aren't above that level, the tax rates are broadly similar to the UK. So you don't gain, but you don't lose. Same with Portugal. Now they had a non-habitual resident scheme which they abolished at the end of 2023. So that was a benefit. Now it's it's the same as the UK, but that's maybe enough for people. A lot of people aren't moving necessarily for the tax benefits. They're also just looking at lifestyle, and do they want the rat race and the expensive cost of living, or do you want somewhere where a cup of coffee still only costs you £1.50 rather than £4?
Do you think, Peter, and I ask this as a question because you've lived it and I have to a very limited extent, but do you think people fully understand, if they do approach it purely from cost of living perspective and a tax perspective, do you think sometimes people fully understand or fail to understand just how difficult it can be to settle emotionally in a new country? Do you see your clients returning to their country of origin after a period of time? What's your observation there?
Well, that was an interesting bit. So when I worked for the relocation company, we were looking at how, the whole moving the family and moving, finding schools. And I think the number one reason, you're dealing with big companies, it's usually assignments. You're going somewhere for 2 or 3 years, and you go back. But the number one reason assignments failed is because the spouse wasn't happy in the foreign country. And the number one reason the spouse wasn't happy in the foreign country was if the kids didn't settle in school and didn't make any friends. So you would look at a lot of effort making sure that people felt happy and comfortable, cultural training, assimilation, destination services where, with the big corporates, when someone's going on assignment, they'll give the spouse someone to take them around for a day and show them where the shops are and where the doctors are and the dentist for the kids, and those kind of lifestyle changes. And I think when you move on your own, without that, then you can just wake up in a foreign country and think, what am I doing here? And also, Dubai is great because it hasn't got any income tax. But as I've found, when I bring it up for people, say, okay, or UAE, because Abu Dhabi is slightly different. But when I say to people, well, of course, the number one place without income tax is the UAE. And it's either the top of someone's list or the bottom of someone's list. I've never met anybody yet that's sort of totally indifferent to it. Everyone's got a view about whether they could live there or whether it would be like hell on earth for them, not just because of the temperatures. Malta's got a great tax system, but it's not very good for people that play golf because I think it's only got one golf course. So trying to sell Malta to a golfist, you're wasting your time because it just won't work, regardless of how good the tax system is. So, so it's all of those things that make it a success or a failure. But the other thing I see is if people are leaving the UK to sell their company, is the classic thing. So you spent your lifetime building up your business. You're going to sell it. They used to get entrepreneurs relief, and some of the capital gain was tax free. That's been reduced a lot. The capital gains rate went up. So people are thinking, well, do you know what? I'll leave the country, then sell it. And of course, there's the temporary non-residence rules, which are designed to stop you just hopping away and then coming back again. So they say you've got to be out for 5 years. So people will, I might not be able to last in the UAE for 5 years. Well, you don't have to be in the same country for those 5 years.
Go somewhere
So go to the UAE for a year or two, realize you're getting tax free. And when you finish, it takes you so long to count your money. But actually, that will get through the first couple of years anyway. And then you can then think, well, maybe Italy or Greece or Cyprus will, make sense at that point. Particularly places like Italy or Greece that have got a flat tax. So all of your foreign source income is taxable at a lump sum. Switzerland as well. So those options are available. Of course, places further afield that, a lot of the Caribbean islands don't have much in the way of income tax either, don't have much in the way of double taxation agreements either, which doesn't make them ideal, depending on where you are in life. But once you've actually realized the transaction, you've got the gain, you've got the cash, and more options open up to you.
And I think as well, that's why working with somebody who has a knowledge of these systems at a high level and the pros and cons. Like I had a client say to me recently, somebody had mentioned to them that they should go to one of the Caribbean islands, but then they realized that, in hurricane season, it wasn't really much fun. And, it's very easy to kind of go online and research myopically, I'm going to get this tax outcome. But you also then need to consider a lot of issues, holistic issues. And that actually brings me to my next question, because what strikes me listening to you is, obviously you've got this really good knowledge of global tax systems, on a jurisdictional level. What's your modus operandi when a client comes to you? You provide advice on perhaps the UK tax changes, and you identify in a collaborative way, this is where it might work. What's the next steps to kind of help them understand the tax rules in the new jurisdiction or the immigration rules there?
But I think that like I say, you look at what assets they've got and what income they've got. And then it's also like, what are the countries that you're interested in? So one of the things we do is say to people, okay, you list your assets down the side, property and stocks and shares and, other investments that you might have. And then let's look at the countries that you're interested in. So let's look at, is it just Europe? Is it other countries? Then we just fill out a table of, okay, these are how these different types of income are taxed in those countries. So these are the ones that would save you tax. These are the ones where it would be about the same. And here's the options and alternatives. And then we do that with us. You've got a one-page calculation effect table, but of course you've got to put all the assumptions behind it. So we look at each type of income in each country, and it ends up being 10, 15-page report saying, here's where you could go and here's what the issues might be. And then I think all tax advisors, we're trained only to talk about the countries where we know about the legislation.
Yes.
And there aren't many people, because I've been doing it long enough, and I'm very careful that these are illustrations, these are examples, and we will not make any decisions based on that. But what we can do is rule out the countries where that don't work for you for a lifestyle basis. narrow it down to a short list of 2 or 3. And if you want to go to, Portugal, Spain, or Italy, then we'll bring in the tax advisors in each of those countries and sit down with them and say, get them to mark my homework and confirm that my numbers are broadly appropriately correct. And then say, okay, well, if that's where you want to go, let's look at the next step of what the immigration alternatives are. That's a key issue for UK nationals as well. Since Brexit, they can't just move to the EU.
Yeah.
You've got it there. Spain abolished its golden visa earlier this year. Residence by investment is available in other countries, and that's why the link with Henley and Partners is so important, because looking at the different routes into the countries and looking at how, which country, some people who love real estate want somewhere where there's a real estate investment option. Some of the private equity people are perfectly happy with a country where your investment can be made in the form of investment funds. And again, those kind of aspects matter to people. You've got some people who are been, already sold the company, so they've got their millions sat in the bank. I was speaking to one guy from the US. His investment advisor had already got in with, a few million in euro-denominated bonds. So we worked out, actually, if they just went from being wherever they were to a different country, well, that would qualify them for the residence by investment.
Wow.
Because you had to have 2 million euros in Italian government bonds to get an Italian residency by investment. So he had 2 million euros. He just moved it to Italy, and it was just, the money went on holiday. He got a residency rights, and of course, when he had that much money, the 200,000 a year flat tax in Italy is a rounding error, and you get to live in Italy.
I mean, who doesn't love that?
Thanks for listening to Tax Bites for Expats. Please do leave a rating or review wherever you listen to your podcast. And as always, remember to take professional tax advice specific to your personal circumstances before acting or refraining from action in connection with the matters dealt with in this series. The material in this podcast is intended to give general guidance only.